Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So I'm back. Now we could take a look again on the MT4 chart, making the video in full HD, so better sound probably will be. Today as usual we have prepared a weekly report where we have considered recent statistics from the United States. It was really the hot spot of the recent week, and PPI, CPI numbers, sudden jump in PPI numbers. It was really important, and it's actually by our view that we're still keeping, and we have shared with you in the recent few months. We suggest that market will be shocked with the numbers that we will get in the nearest 2 months, and that drastically will change the policy of the Fed. So at least one rate change will come probably in November. In September, well, Fed has reasons to make the pause because CPI jump was not really significant. But in November, it will be very probable this will be another rate change. And I'm really think that it might be in December as well. So we will see. Simultaneously, United States economy will start showing more evidence that, well, problems have appeared, and investors will gradually have to forget about soft landing. Meantime, in Europe, situation stands even worse, and from that standpoint, whatever problems the United States have, the balance between the euro and United States dollar definitely stands not in favor of the former. And even big banks already start to acknowledge this, changing the forecast. For example, the HSBC now said the nearest target is 1 or 2 on euro. This is totally corresponds to our long-term view. As we said, that in current fundamental background suggests rising United States dollar index, and we have even lower target. So it is winding road to the 90, even below the parity, but still market is moving it. And if you take a look on the monthly chart, you will see that in general this bearish stuff is still valid. Speaking about the short-term perspective, euro currency keeps bearish context. The minor pullback that we have suggested as the 30% retracement of the butterfly pattern on the fall time frame chart has been completed. As you could see with this minor spike on the daily, on intraday charts it looks a bit better. So based on this picture, I do not see any reason to suggest some kind of the reversal or something. Market is not at the oversold. Oversold stands at 105.80 for now. We have no FIB support levels here. We have no divergences. Trend stands bearish. And take a look at the performance. After solid collapse, market remains near the bottom. It doesn't make any attempt to reverse this action, return right back up inside of this minor pattern. So it's still standing. Even since it has the target. So take a look here, we have the secondary ABCD pattern. This is also correct pattern. It's not necessary that it has to be right on top. And market has completed the OP here. Even without this destination point, reaction stands very small, which suggests that, well, overall context remains bearish. On the fall time frame chart, price consolidation also start looking like flag pattern. It's very tight and it's also bearish. Trend remained bearish. And take a look right in the beginning of the week, we could get grabber. Let's take a look at the fluctuation of the price around the MACD. Pullback that we have suggested, as I said, minimum target has been completed. 30% of the whole butterfly action has been reached. As I said on Friday, that with this so strong downside momentum, hardly we will get any more significant rally, more significant pullback, even despite that we have the butterfly here. That has happened. Currently, I would consider this level as a vital for the short-term bearish setup. Why? Because this is confluence, strong level 107.16, 107.27, and around 107.40 is a trend line. This trend line is important because this is lower border of the daily flag consolidation, and somewhere in this area, that's the vital one. So market has to stay below this level, below this area, to keep bearish context valid. If for some reasons price will jump, return it back up above the confluence, this might have not the consequence, or not only the consequences for intraday performance, but for a daily as well. Because just imagine that you will see that price returning right back up right there. It will be absolutely different, quite different story. So we could get lots of different bullish patterns here. It might be the hand shoulders, for example. It might be the huge engulfing pattern, something of that sort. So it will change the rules of the game in this case. For now, bears set the rules, so they control the market. Overall price action looks bearish, and we keep bearish context. For taking the position, well, you will have to make the decision. So either split the position, or if you're sure that market will show a bit deeper retracement, you could wait for it. Maybe you will wait for a grabber as a confirmation of the possible downside start, or something of that sort. On the hourly chart, here as you could see what has happened, that is the ABCD retracement on the target of the butterfly, on the daily OP, the ABCD pattern. This has happened, and market right now is turning down. Here's very similar situation to the one that we have discussed last week on the gold market. If you remember, recall that there on the hourly chart was absolutely the same, fast acceleration. So take a look where the target should be if it will be gradual ABCD, and where it is and it stands right now. It's really fast acceleration. It's 2 times faster. And right after that, you could see what is going on. Market erasing this rally. It's not totally erased, but it stands somewhere near. This is a sign of the sharp change of the sentiment. And the gold market was the same, and after that, market just collapsed below the lows. So here could happen the same thing. So this is not a good sign. Usually when the market indeed bullish and it shows so this kind of rally after the minor pullback, it usually goes higher to the next destination point. But here we don't have it. But at the same time, just keep an eye for some case on these points. First of all, avoid the possible grabber if it will be formed, and watch for a breakout of these areas, 618 level and these lows, because in this case market will just totally erase this ABCD pattern with the drop below this 106.45 area. So it's not necessary to wait for this moment before taking the position, but if you will take it, just keep an eye on these things. If something will go different, make the decision, maybe to close the position or do something, because normally if everything will go as we're suggesting, market just should keep going lower in this this chart. So based on this big background, we are not considering any long positions by far on the nearest target. Our target on the daily chart stands around 106, because 105.70 is oversold. 106.11 is the first weekly fib level that stands near the market. But since in around 106.11 market will challenge these lows, where probably some stops exist, where not include some slippage slightly lower. So that's why we're treating as a target around 106. So this is nearest destination point that we could consider for our day-by-day trading, and then we will see what will happen. So that's all for comments on the market right now. So let's keep watching how it will go.